Big pharma deals coming out as global giants attend the American Society of Clinical Oncology's annual meeting in Chicago. Sanofi agreeing to buy immunology company Blueprint medicines for over $9 billion. Meantime, Bristol-Myers Squibb will pay biotech up to $11 billion to license a next-generation cancer drug. Joining us now with more on what's to come out of this big pharma event, we've got Evan Seigerman, BMO Capital Markets Managing Director of Biopharma Equity Research. Evan, great to speak with you here. I do want to start on this deal for over $9 billion here. What does that signal for you for the rest of the sector?
So I don't cover Sanofi, but I can talk more broadly about what it means for the space. And it's great. We love to see M&A. There's been a bit of a dearth in big M&A, and this is a nice sizable deal. I know a lot of the companies that I cover talk about doing deals in the $10 to $15 billion range, and it signals a few things. One, that there are biotech companies producing great data, but two, that the big players are comfortable, diving in a little deeper, spending $9 billion, not just spending $500 million. So I like to see that because that is the lifeblood of the sector.
Evan, to what extent do you believe some of these deals are either reactionary or trying to front run any potential moves from the administration on policy?
Hard to say. I mean, a lot of these biopharma companies that I cover have holes in their pipeline. Look up Merck, for example. Keytruda goes off patent at the end of the decade. They're going to get hit by the IRA at some point. So they really need to, backfill that. Same thing with Bristol, which is why they decided to license in the asset from BioNTech today. And I also highlight, not in the oncology space, but Regeneron had a huge move last week to the downside and opting into in-license and obesity assets. So, more moves than just the Sanofi asset the Sanofi deal you had mentioned.
And when you think about regulation more broadly on the sector over the course of the next 4 years, how do you think that it's going to net out in terms of how that regulation may impact this kind of deal making going forward?
For sure. So I think generally the FTC right now is a bit more deal friendly, but who knows? In terms of FDA, it seems that, even with all the talk, it is a lot of, business as usual, especially when we talk to the companies that we cover. A lot of their interactions haven't really changed. That's more headline risk. I think the big unknown is any sort of drug pricing reform. Remember, we had the EO a few weeks ago. Folks were concerned that that could lead to what's called most favored nations pricing in Medicare. Still haven't seen much on that front. I'm, of the belief that it doesn't end up amounting to much. Probably more headline risk than anything at this point.
This was seen as one of the most investable sectors coming into the start of the year. Is it still that, Evan?
I'm still positive on biopharma, as I am a biopharma analyst, but I do understand some of the headwinds. I think folks have been spooked just when it has come to the drug pricing issues, the potential for tariffs. But hopefully, as that comes, is behind us, folks will be more interested in investing in the sector. And you see deals like this, which shows that there is, a pulse, and these companies are actually, moving forward.
How much of the capex do you expect that if they're prioritizing more of trying to partner up or consolidate efforts? What does that mean for their own research and development capital expenditures as you're measuring them?
So, I think R&D budgets for these companies remain relatively stable, right? They kind of set that out at the beginning of the year. Mm-hmm. These companies do invest a lot, especially if you even buy an asset, because if you're a big biopharma company, you got to run that phase 3 trial. So that's R&D. In terms of capex, a lot of the companies I cover have announced additional manufacturing investment in the United States. That's probably to placate the administration. I think that, we do expect these companies to continue to invest in the United States. Lilly, upwards of $40–50 billion, all companies across my coverage do that. So bottom line, a lot of investment in R&D, a lot of investment in CapEx, and hopefully some more deal making.
And so if those manufacturing capacities come online, now we're talking about overhead, we're talking about staffing, we're talking about, just being able to continuously utilize that or make those assets make sense to investors. Right. What are kind of the longer term returns that you're starting to model and bake in as we're seeing some of those announcements?
Well, in biopharma, you got to make your product somewhere. So, a lot of these companies do manufacture in the United States, and they do want to bring some of that bring some of that international manufacturing back here. A lot of manufacturing also happens in Ireland, so there could be a shift to that. Long way of saying that if they have drugs to sell and they can keep selling them, they will keep making them. The cost to do that is lower than what they will generate in profits or in revenues from selling the drugs. So, it is an okay thing to see, and I think that investment is very healthy for the sector.